Sell the Semiconductor ETF SMH. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So the Semiconductor ETF is one of the top performing from the lows, 32-ish percent. From the highs, we are still minus 31-ish percent away. So here we have the chart, weekly data points, and we go pretty far back. So yeah, this ETF has been around for a long time, seen a very substantial rally that peaked around 2021. After that, we have been in a pretty clear downtrend. The issue is that we did have this rally here back between June and August that failed at the blue 100 week moving average. Now we have another rally. If we just quickly go over here to the daily data points, like that, and then we do see this red 200-day moving average. That is like the major indicator in question at the moment. It is a pretty clear resistance level. So that's sort of like the risk here for the bulls, is that that's a very key moving average. If we look at some of these other indicators, looking at overbought slash oversold and oversold levels. So here are the weekly data points. So looking at RSI, we see here that the previous time we had this weekly RSI level, it was back here when we met that resistance at the blue 100 week moving average. Same thing here with the purple 20 week PPO. When we go here to the daily data points, we do see that when we were rejected here from the red 200-day moving average, we were also overbought, and we had the same reading we had back here in August. Like it was back here, which was a pretty good time to go short the semiconductor ETF. So from a technical perspective here, it's a messy situation because we are emerging from a low level, and if you look here at the last candlesticks, we don't see that instant failure that we saw back here and also back here. So the bulls are doing something. But the fact is that they are still fighting that resistance level, 200 daily moving average, but they are actually fighting it. They did try to test it. They tested it again this week. So two tests in a relatively short time shows that there is some bullish pressure. So the thing is that we have a 200 daily moving average and RSI resistance. However, I will only give it the bears a -4 here because we see that the bulls are pressuring them more than they used to. So there is something here that could be more exciting for the bulls. Let's look at the fundamentals. So when we first look here at performance, year to date, SMH is minus 27.5%, while the broader tech ETF XLK is minus 22%. Beta 1.17 versus 1.04, PE 28.22 versus 27.53, so pretty similar. Neither of these are really offering much in terms of yield, 0.50 versus 0.67. When we look here at the holdings, 26 versus 77. So these are some pretty big companies here in the SMH. Electronic technology, 84%, but don't get too hung up on the name of these categories because it's not an accurate science. Okay, so a lot of large caps to be expected and very much dominated by USA. So I think that both of these were relatively similar when it came to the fundamentals, but there are some slight disadvantages here with the semiconductors ETF. Next, we will look at seasonality. So now I have take advantage of the Black Friday deal here on trading views, and I now have the most expensive option. It's a pretty good system, but what is annoying is that you actually do not get, even if you pay, for the most expensive subscription, you don't get live market data. You need to subscribe to that as an add-on, which is annoying, but yeah. Here is the seasonality. So you can see here in green here over the last 5 years. In blue you have 7 years, and 10 you have red years. The seasonality here leading into the end of December is pretty good. To the right here, over the last 5 years, November closes higher 80% of the time, and also December. Over the last 10 years, November 60%, December 70%, and over the last 15 years, November 60% higher, but December is approaching more 50-50. But generally speaking, this is a pretty good seasonality, but the problem is that January is very weak. The current most relevant seasonality is, however, bullish, so I do give the bulls a 7 here. Next, we will look at relative performance. So long term, there is an almost perfect correlation with the S&P 500 at 97%. You have a 98% against the tech ETF XLK, and you do have minus 23% with the dollar index. Short term, then you do have 89% with S&P 500, 92% with XLK, and minus 81% here with the dollar index. So short and the long term, the strongest correlation we do get is with the XLK, which is not like a huge surprise. If we have a bit of a look here at XLK, so here we have the weekly data points. We have seen this nice rally here from the red 200 week moving average, and a great time to buy. And we have been able to break out above some resistance levels like the purple 20 week moving average. Looking at RSI and PPO here, we are not actually at we are not at prior fail levels yet. So if there is more fuel left in the XLK, then that could help the SMH, even though it is elevated. And when it comes to moving averages on the daily data points with the XLK, you have breaking out above the blue 100 day moving average. You're not overbought yet on the dailies on RSI. Accumulation distribution is looking bullish. So basically, when it comes to the XLK, there isn't that OMG moment yet in terms of RSIs and resistance levels. So there is a bit of a context here on the technicals that could actually benefit the SMH. Yeah. Now let's do some relative performance studies. So we do SMH slash XLK like that. Weekly data points. So you can see that it's been a bit up and down for sure. There seems to be some kind of time cycles here. So let's have a bit of a look here at how reliable these potential time cycles are. Yeah, there is something here. The time cycles have differed a bit over time, but you see that there is something here definitively regarding time cycles. The time cycles suggest that we have a new major rising phase now in development, which means that the semiconductors could outperform the broader tech ETF. Looking at the RSI dynamic between these two, we are not at high risk RSI levels yet. That's good. Let's quickly have a bit of a look here at the daily data points. In this case, we are pulling back from a high overbought RSI level. There is a bit of a tendency after those tests to explore the lower regions of RSI. So there could be some risk of underperformance from the SMH. So in that case, let's have a bit of a look at SMH slash XLK when it comes to the seasonality. So in that case, the semiconductors have a tendency to underperform the broader tech ETF into the 26th of January, which fits with what we did see here on the technicals on the dailies. So the bears end up with a -3 here on relative performance. There were some issues. We end up with a score of -0.5 in favor of the bears. We are at 200 daily moving average and RSI resistance. The most bullish thing is that we have the very strong seasonality for the ETF. But there is resistance that the bulls have to clear. So yeah, there is a bit of a bearish lean here, and there is a bit of a bearish context, but there is a bit of a but. The seasonality is still very much the highest score in this analysis. So we have some time left. Let's look at the stocks within the SMH ETF. So let's look at Taiwan Semiconductors, which is the biggest component. There is the weekly data points. Yeah, so we have seen a strong rally, 2 weeks of big performance. We are sort of duking out with the red 200 week moving average. Yeah, so when it comes to this stock, it's a messy situation because it's such a battle level. Yeah, but it's interesting. But it's sort of like the big move, the big bull move happened. So now we are betting on continuation. So let's go further down the list. Next is Nvidia. In this case, this is an interesting pattern because if we see here, let's have a bit of a look at the dailies first. So in this case, the blue 100-day moving average was a key resistance level, but the bulls have been able to flip it to support. So this is a very constructive action here for Nvidia. Let's quickly look at these other indicators. Yeah, I mean, we are still at a very low RSI level, and we didn't see a fail when we touched the level from August, which is constructive because it shows that there can be some different forces in play here. Looking at the daily data points, we did actually get overbought when we had the recent pullback. As such, it was very much to be expected. Okay, so let's quickly look at Nvidia here in terms of seasonality, like that. Yeah, I mean, if you look here to the right, closes higher 80% of the time, 100% in December over the last 5 years, 60, 80 over the last 10, last 15 years, 60, 60. Looking here to the left, you can see that the seasonality looks pretty darn good for Nvidia. And Nvidia is definitively one that looks especially interesting here when we then go to the fundamentals, like that. So here you can see the price book ratio, price to sales, and PE, and the dividend yield. So the dividend yield on Nvidia is atrocious, but this is not a yield stock anyway. Looking at price to book, we are at yeah, we're not like at a very low level, but compared to some of the recent history, it is a bit low, which is showing some value. Price to sales is actually at a bit of a similar issue level. Looking here at price to earnings ratio. I mean, this is not like deep value, but there's smaller value than we saw quite recently, so it could be interpreted potentially as a bit of a value level. Also, let's have a bit of a look here at the forecast. So 41 analysts have a 1-year price target for Nvidia. So the average price target is almost 20% above us. Minimum is 32% below us, and the highest is almost 100% above. So I mean, the analyst ratings here are pretty good. So there's some of the ones we have looked at here. Definitively, Nvidia looks pretty darn interesting. So here you have the technical ratings that we do get here from TradingView. They have like a buy. These tools that they have, they make sense, but the problem with the market is that you have to buy when things look bad and sell when things look overly good. The issue with these indicators is that they will be like strong buy when the stock is at high risk levels for the bulls. Let's look at Nvidia slash SMH, like that. Weekly data points. Yeah, seeing I see some time cycles. That's definitively something that yeah. But you also see time cycles here on the RSI, suggesting a major rising phase here for Nvidia versus the SMH. So We looked at the Semiconductors ETF in depth, then we started to look under the hood, and we did find some very interesting bullish opportunity here for NVIDIA. So this almost is a potential pairs trade, really, where you could go short the Semiconductors ETF while going long NVIDIA. But yeah, interesting times in the market, and to get more stuff, you just go here to diamondarm.com and get VIP access.